I want to talk to you about three issues, and they're quick issues. These are the political issues. I'm going to tell you, the U.S. is in the middle of a political battle of immense proportions today. When you get to be my age, you'll have history and experiences, and I can tell you, I have been to this barbecue before. Today in the United States is very much like 1978, sort of the middle of the last term of Jimmy Carter. All the left policies we had for 16 straight years, I'm going to put them there. I call them the Four Stooges. That's Johnson, Nixon, Ford, and Carter, which to me was the largest assemblage of bipartisan ignorance probably ever put on planet Earth. And in 1978 was the end of this era of 16 years. And I think today we're in very much the same. The system has run out of answers, and you're just about to see a major revolution, political revolution in the U.S., pro-growth. I think the Republicans take the Senate, and I think by 2016 you'll find a very pro-growth president, and you will see a type of renaissance in economics, much the way we had from the year 1981, let's say, 1981 through the year 2000. I am very excited. I couldn't be more optimistic than I am. The issues are the same old issues, and I just want to go through them with you. There is no one looking at this planet that cannot feel offended and absolutely brokenhearted by the maldistribution of income. I mean, it's not fair, and I'm going to use U.S. examples, but let me use a U.S. example with you. I have a farm up in Kentucky. And if you go up one of the hollows up there in Kentucky, you find this single-wide little trailer home. The windows are all broken. The people who live in that trailer throw trash out in the front yard. They do. Both parents are really skinny. They're missing about half their teeth. It's obvious it's a meth lab that they're running, a drug lab. They've got this beautiful 5-year-old girl whose dress is torn. It's dirty. What has she done to deserve her lot in life? Nothing. You go to Chicago, the south side of Chicago, one of the slums in the inner city there, and there's this beautiful little 5-year-old girl living in this apartment building with bars on the doors. The gangbangers come up every night, bang, 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 in the building, scaring everyone, yelling things. Her mother's drunk in the back of the room. She doesn't know who her father is. What has she done to deserve this lot in life? Nothing. Then you go up to Lake Forest, where 2 of my students have married. One of them is an investment banker in downtown Chicago. The other one is a lawyer. She works in one of the top law firms there. They have a beautiful home right on Lake Michigan there in Glencoe, or Lake Forest. And they have a 5-year-old daughter as well, and that little girl, she has a tent outside. She's having all of her little friends come over from her private school. They're all going to this little party. They have a balloon maker that makes all these designer things. They have little cupcakes all around. What has she done to deserve that life? When you look at this world, you look at it as a human or a father. I'm going to put it in terms of a father. It makes no sense, the maldistribution of income. I happen to have 6 children. I have 11 grandchildren. I have my first great-grandson. And when I look at my kids, I'm a father. I want all of my kids to be equally successful. And when one of my kids starts falling back, what do? I shift resources and give them to the kid that's having a problem. Whenever one of my kids has a problem, I try to devote resources to bring that kid back up. If one of my kids is doing extremely well, what do? I withdraw resources from that person. That kid doesn't need it. As a father, I want all of my children to be equally successful. And I can remember when my father, I was the youngest of 3 sons. And I can remember when my father was supporting my 2 older brothers who, it's just us today, isn't it? They were just slack asses, to be honest with you. And my father was educating their kids and doing all this stuff, and nothing for me. I said, Dad, what's the matter? He was my best friend ever. He was the best man in my wedding, my best friend, and here he was devoting all these resources to my brothers and not to me. I said, here I am performing, Dad, and nothing. I get nothing. My 2 brothers are doing nothing. You're giving them all these resources. What is it? He said, son, I can't explain it to you, but someday when you're a father, you'll understand, and I do. As a father, you want to make sure everyone is equally successful. And if I were the father of the United States, not the President of the United States. Now, think of this for a second. If I were the father of the United States, I'd want to make sure every American does equally well. I don't see why you should make more than he does. I mean, you've got parents, you've got kids, you've got blood feeling. You're a human being, so is he a human being. You're all equal in the eyes of the Lord and in the eyes of the Father. You are. I don't see why anyone should do more than anyone else. And if I were father of the country, now not president, what I want to make sure is I want to make sure everyone is equally successful. And to do that in economics, what I would have to do is I would have to take everyone who makes above the average income. Okay, you with me? I'd take everyone who makes above the average income and I would tax them 100% of the excess above the average income. You follow me? And everyone who makes below the average income, I would subsidize them up to the average income. You follow me? Everyone who makes above the average income, I'd tax them 100% of the excess. Everyone who makes below the average income, I'd subsidize them up to the average income. In this way, I could assure that everyone is equally successful. You recognize it, don't you? Now, if I actually did that, if I actually taxed everyone who made above the average income 100% of the excess, and if I subsidize everyone who made below the average income up to the average income, I will stipulate today, counselor, that everyone will be equally successful at zero income. Everyone will be equally poor across the field. This is a very important theorem. It's math, it's not ideology, it's not French, it's not English, it's not American, it is economics. It's not right-wing, it's not left-wing, it's not Republican, it's not Democrat. It's math. Every time you attempt to change the distribution of income, you lower the total volume of income. To redistribute, you take from someone who has more and you give to someone who has less. You all follow me in that? By taking from the person who has more, they earn less for the work they do, therefore they're going to work less and produce less. Their income will go down. To the people to whom you give that money to, they now have an alternative source of income other than working, and they too will work less. Whenever you try to change the distribution of income, you will lower the total volume of income. On this planet, we have had revolution after revolution after revolution, all dedicated to changing the distribution of income. And the one thing we know is that no revolution has ever succeeded in changing the distribution of income. What every revolution has succeeded in doing is destroying the volume of income. When you look at the world today, we have had a redistributionist revolution of the last 14, 15 years in the U.S. for sure, and I think in many of these other countries, and the consequences have been the longest, deepest recession of virtually all time. This is the battleground. How do you bring prosperity back? I love the book by Piketty. I mean, I would beg all of you to read that book, and if that doesn't convince you that supply-side economics is right, there's something wrong with you. I mean, can you imagine imposing tax rates of 80%? I mean, it's just crazy. Nothing like that could be imposed in a democratic form, in a democratic government. But this is one of the issues. This is, if you tax people who work and you pay people who don't work. Do I need to say the next sentence to you? You're going to get a lot of people not working. If you tax rich people and give the money to poor people, you're going to get lots and lots of poor people and no rich people. You know, whenever the government gives away valuable resources, it goes bankrupt, period. I mean, you can't give away valuable resources and not go belly up on that. This is the one issue that's going to be political. Another one I love, and it's also very closely related to this issue, and I want to do this quickly with you, is taxing the rich. And I love this topic. It's really fun because, you know, it's amenable to some research. Now, do you guys have something in here equivalent to our Internal Revenue Service? You got the exchequer? You know, I do love you people. You are very entertaining people. You know, if there weren't a Britain, we'd have to invent it. I mean, you just are so much fun to come over here and you speak in the cutest ways. I mean, I love it, all this stuff. But you come over here, and we have this war going on taxpayers. You know, I have clients at my firm who pay our firm money. I want to hug my clients. I don't want to punch them. But here we have all the people who pay all the money to support government here in Britain, and what does government want to do? Throw them in jail, get more from, they go. I mean, it's really very entertaining. Usually people like their customers, but not the exchequer. they don't like their customers. In fact, if you don't pay me more, I hate you. In fact, the more you pay me, I really dislike. I find that. We have great data in the U.S., and I'm going to take you through these data. In 1913, we put in the progressive income tax in the United States. Prior to that, we did not have an income tax, a progressive income tax. We had a flat tax during the Civil War that was repealed after the Civil War, but this was the first time we put a progressive income tax. The highest rate when it was put in was 7%. Now, I will stipulate right today, just so long, if any of you know Paul Krugman, just you can tell him I admitted that when the rich went from a tax rate of 0% to 7%, I will concede that tax revenues from the rich went up. I give up. That's true. But if you look at the income tax, it's sort of neat. That was 1913. By 1919, we'd bopped that rate up to 77%. I mean, it's 6 years. We pushed it up to 77%. After World War I in 1920, we had one of the most contentious presidential races of all time. Woodrow Wilson's hand-picked candidate was the governor of Ohio, a man named Cox. And Cox became the Democratic Party nominee in 1920. And he chose his best friend, who had been the governor of New York, a guy named Franklin Delano Roosevelt, as his running mate. So the ticket was for the Democrats, Cox and Roosevelt. And for the Republicans, it was Harding, Warren G. Harding, and Calvin Coolidge. All right, that was the race. The issue was tax cuts, period, just like it is now. Obviously, Cox and Roosevelt wanted to keep the tax rates at the pre-war level, at the pre-1920 level, at 77%. And Harding and Coolidge ran on the slogan of a return to normalcy, which meant cutting those tax rates way down. Let me tell you what they did. They won the election in the largest percentage ever. They came into office. They cut the highest tax rate in America. Now think of this. From 77% to 25%. Is that a good enough cut for you? They cut the rate to less than a third of what it had been. Now, we have all the tax return data because the IRS really likes to know where its victims are. So we have all of these data. If you look at the top 1% of income earners, when the tax rates went from 77% to 25%, guess what happened to tax revenues from the top 1% of income earners as a share of GDP? Now, the first thing I want you to know is during that period, as opposed to Europe, our period was called the Roaring Twenties. We had the biggest boom of all time during the 1920s, an incredibly good economy. Tax revenues from the top 1% of income earners as a share of GDP went through the ceiling. In spite of the fact that the tax rate was reduced to less than a third of what it had been, the tax revenues went way, way up. Then we had Herbert Hoover came into office in 1929. We had the Smoot-Hawley tariff, which was a huge tax increase on traded products. The U.S. went into a spiral down in the Great Depression. In 1931, Herbert Hoover decided the best policy he could do was the government was running short of money, and Herbert Hoover decided to raise taxes in the middle of a depression. Really clever fellow. He raised the highest marginal income tax rate. Now think of this. In 1932, on January 1st, 1932, the highest marginal tax rate went from 25% to 63%. That a good enough increase for you? He increased excise taxes. He put in a death tax. I mean, there wasn't a tax he didn't try to go up and raise. He lost the election in 32 to Franklin Delano Roosevelt. Roosevelt came in. First thing he did was did the Bank Holiday Act, which I won't go through with you, really bad on monetary policy as well. And then Roosevelt, of course, raised taxes. On January 1st, 1936, Roosevelt raised the highest tax rate from 63% to 79% on up to 83%. All right? So during the Depression, the highest rate went from 25% to 83%. All right. He also put in a 90% inheritance tax. They put on a retained earnings tax. Any of you in business know retained earnings? They put on a 25% per annum retained earnings tax, and that really makes you want to work hard, doesn't it? All right. Guess what happened to tax revenues in the top 1% of income earners during this whole period of the Great Depression? Even though they raised the tax rate from 25% to 83%, more than a threefold increase in the tax rate on the rich, revenues from the top 1% declined as a share of GDP. And we had the greatest depression of all time. Then we came out of the Great Depression. I'm going to take you to John F. Kennedy. John F. Kennedy in 1963 cut the highest marginal income tax rate on income earners from 91% to 70%. He put in the investment tax credit, shortened depreciable lives for plant and equipment expenditures. He cut the corporate tax rate from 52 to 48%. He tried to cut it to 46%, but thank God the Republican Party blocked him from that irresponsible move. Barry Goldwater and all the Republicans voted against the tax cuts. Bob Dole voted against cutting the highest rate from 91% to 70% because he said we couldn't afford the revenue losses. I mean, think of that. Do any of you know what that period in U.S. history was called? It was called the Go-Go 60s. There was a huge boom in the U.S. The stock market soared. Guess what happened to tax revenues on the top 1% of income earners? Now, they cut that tax rate from 91% to 70%. Tax revenues in the top 1% of income earners, again, went through the ceiling as a share of GDP. Now, not just in nominal terms, as a share of GDP. Then we had the period which I like to call the Four Stooges. This is Johnson, Nixon, Ford, and Carter again. Again, ignorance. They raised taxes. You had Lyndon Johnson's tax surcharge. I mean, you couldn't make this stuff up. I mean, you had all of these taxes and wage and price controls. I mean, you can't make that. Guess what happened to tax revenues in the top 1% of income earners? They went down during this period, the 16-year period of depression. And then, excuse me, does anyone have any water by? No, I'm joking. Stop. I do this just because the skies opened. Oh, be still my heart. The sun shone through the clouds and hit the earth. The fields turned green. The animals, they multiplied. The trees blossomed and bore fruit. And the children danced in the streets. And Ronald Reagan was nominated. And then Ronald Reagan was elected. Now, I'm going to give you some numbers here. Okay, we cut taxes. And when I say we cut taxes, we cut taxes. If you sat in a chair, we cut your taxes. If you jumped, we cut your taxes. If you were asleep, we cut your taxes. If you flew, we cut your taxes. If you were rich, we cut your taxes. If you're poor, we cut your taxes. If you're fat, we cut your taxes. We just went after every tax we could find. We cut the highest income tax rate. Now think of this: from 78% to 28%. Is that good enough for you for the fat cat Richies? We cut the corporate tax from 46 to 34%. And we had a boom period. And it wasn't just Reagan, it was Clinton as well. Clinton got rid of the retirement test on Social Security. Clinton cut taxes on traded products. Clinton signed into law welfare reform. Clinton had the biggest capital gains tax cut in U.S. history, exempting all owner-occupied homes from capital gains taxes. I mean, really amazing. Clinton cut government spending as a share of GDP by 3.5 percentage points, more than the next four best peacetime presidents in U.S. history combined. I mean, it was incredible. In 1980, the top 1% paid taxes equal to 1.5% of GDP. Do you follow me? The top 1% of income earners paid that. In 2006, the top 1% of income earners paid taxes equal to 3.2% of GDP. It more than doubled as a share of GDP by cutting taxes. Now, that is only true for the top 1% of income earners. Every other category that had their tax cuts, we lost revenues on as a share of GDP. But the richies, when you cut their tax rates, the revenues go way up. Now, why would that be the case? Well, richies, like everyone else, they don't like to pay taxes. But everyone does. But richies have something that poor people don't have. and even middle-income people don't have, they have money. They're rich. They can hire lawyers. They can hire accountants. They can hire deferred income specialists. They can hire congressmen. They can hire senators, excuse me. I mean, when you see a group of people hanging with the president, I mean, don't for a moment think that that's a group of street people trying to explain to Obama what it's like being poor. These are people who want favors from him. That's what they do. They got favor grabbers all over the place. Rich people not only have the means to change their taxes, they have the ways to change their taxes. They can change the location of their income. I moved from San Diego, Rancho Santa Fe, California, to Nashville, Tennessee for one reason and one reason alone: taxes. I bought my house in Nashville, Tennessee with my first year's state tax savings, because there is no income tax in Tennessee and there's a big one in California, in case you don't know. Rich people can change the location of their income. Rich people can change the volume of their income. They don't have to work. They take a day off and go sailboating around the world. Rich people can change the timing of their income. They can do IRAs, KIOs, 401ks, all these tax-deferred plans there. They can do all that. Rich people can also change the composition of their income. Middle income and lower income people can't do that. Now, let me give you an example of that. You remember this French guy in the U.S.? He's from Omaha, Nebraska. You may have heard of him. His name is Warren Buffett. You know Warren Buffett? He calls it, it's got two T's. It's really not Buffet, damn it. I'd love it if it were Buffet, because he sort of fits the image. Never mind. He wrote a letter. He's been telling everyone in the United States, all my friends and I, all my rich friends, we all want to pay more taxes. We think we should be taxed more, but you don't do it. We think you ought to raise tax rates. You've heard all this, haven't you? I mean, you're aware of this, aren't you? And as a recognition of his genius, he got a Congressional Medal of Honor from the president. There you go. It's amazing what favors you can buy from a political process. It's just amazing. And he wrote a letter to the New York Times, and I'm going to go through that letter with you a little bit. He said, in my office, I have lower tax rates than any of my other office employees. You all are aware of this. This is all about his 2010 income. He said, in fact, I have the lowest tax rate of all the 40 people in my office. Now, he included the payroll tax, which probably he shouldn't have done, but he included the payroll tax, and his tax rate was less than half of his secretary's tax rate, he said, and it was true. In fact, he said that my tax rate is 17.4%. That's what my average tax is. That's my taxes divided by my income. And it was 17.4%, and I paid $8 million in taxes. It really was a little bit less. He was exact in the number he did in the New York Times. So I'm a math whiz, so hold back for a second. Be prepared for some advanced math. I took his taxes, a little less than $8 million, and divided it by 0.174. You follow me in this? And I was able to estimate his adjusted gross income. Now, his adjusted gross income in 2010 was $40 million. That's a lot of money. But then I went back to being a professor for a minute, and I said, what is income? Now, all of you are aware of a place called the University of Chicago, and there was a professor, Henry Simon, and the Simon definition is the correct definition of income. The Simon definition of income is what you spend, what you give away, and the increase in your wealth. That's your income in a year. What's happened to your wealth that year? How much did you spend and how much did you give away? Think about it for a second, and that's your wealth. That's your income for the year. So I went to the Forbes magazine, which looks at the richest people in America, and looked at Warren Buffett's net worth at the end of 2009, which is $40 billion. I then looked at Warren Buffett's wealth at the end of 2010, which had jumped to $50 billion, an increase of $10 billion. I then went to the Bill and Melinda Gates Foundation website, which you can do, and you can see how much Warren Buffett gave to the Bill and Melinda Gates Foundation. It was $1.75 billion that year. There were 3 provisions in that. Bill and or Melinda, or both of them, have to still be working with the foundation, otherwise I take the money back. Number 2, you got to spend the money within 3 or 4 years, otherwise I take the money back. The third provision was sort of neat. If for any reason whatsoever the tax advantages of this gift are removed, I get my money back. Charitable all the way. All right. I didn't go any further, but he has 2 sons who have foundations. He has a daughter who has a foundation. As you know, he owns Berkshire Hathaway, which is a holding company for lots of other companies, which means when you buy and sell those companies, you don't have to realize capital gains and pay taxes. Below that level, it's an insurance company, which means you get to deduct future payments. I won't go through all those things. But if you look at his income and a definition of Henry Simon, his income was about $12.5 billion in 2010, and he paid $8 million in taxes. His effective tax rate wasn't 17.4%. His effective tax rate was 0.06% is what he paid in taxes. Rich people can do this. That's why when you lower tax rates on the rich, all of a sudden they find it's not worth hiring the lawyers, accountants, deferred income specialists, the favor grabbers, and all that. That's why they can change the income. That's why you want a low-rate, broad-based, flat tax, so you tax Warren Buffett. If you make 10 times as much as I do, you should pay 10 times in taxes as much as I do. We should have a low-rate, flat tax that taxes all income at the same rate. No deductions, exemptions, exclusions. It's there. You want the lowest possible rate. So you provide people with the least incentives to evade, avoid, or otherwise not report taxable income, and you give them the least places to which they can escape. This is the battleground in the U.S. today. It's on redistributionist economics, Piketty. It's on taxes and economic growth. It's it. Those are the issues. The last one, if I have, how much more time do you want me to have? Can I talk for about 7 or 8 more minutes? The last one is stimulus spending, which is about as dumb as anything I've ever heard. I have never heard of a poor person ever spending himself into wealth, but maybe I missed that in Econ 1. You know, while all my colleagues were always getting all these advanced courses in economics and getting their PhD, the way I got my PhD is I took Econ 1 20 times. So I finally understood basics. And if you look at the stimulus spending, and let me use my dear friend Larry Summers as an example. Larry Summers described stimulus spending this way. If you give a guy $600, that guy's going to spend more than he otherwise would have spent if he hadn't been given the $600. You with me on that? And that guy, in turn, is going to spend more than he otherwise would have spent. So that'll create jobs, output, employment by the people who are now going to produce the goods and services he's now buying that he otherwise wouldn't have bought had he not been given the $600. You with me there? That guy's going to have higher income than he otherwise would have had. He's going to spend more, and that's going to create more jobs, and there's going to be this cascading effect right down to the system there, and the economy is going to lift itself up by the bootstraps. You've heard of all this, haven't you? This is all just Keynesian economics. Now what it is, of course, the increase in spending for every additional dollar of income, we call that the marginal propensity to consume. And the total increase in total income for the stimulus spending, if you take total increase in GDP from stimulus spending divided by the stimulus spending, that's the multiplier. You with me there? And to be a little geeky with you guys, sorry about this, but if it were a class, I'd have you have your papers out and taking notes on this. But the multiplier is equal to 1 over 1 minus the marginal propensity to consume. After Larry Summers explained this, he went and sat down and he said, this is why we're having the stimulus spending. And just so you know, we had a big stimulus spending. We had the Paulson $700 billion. We had the bailout of AIG, the farm bill. We had the home bill. We had all these others. We had about total, above and beyond what we normally would have spent in the U.S., about $3.75 trillion in stimulus spending. That includes Obama's $860 billion. It was all documented beautifully by Christina Romer and Jared Bernstein in their white paper where they do analysis of all the multipliers. They get the correct multiplier out. They then take the stimulus times the multiplier. That gets the total increase in GDP. They then spread it over all the appropriate quarters. They then took all the quarterly increases in GDP. They then took the Okun's Law, which translated the increase in GDP into unemployment and showed how the unemployment would come tumbling way down. And with this, Larry Summers sat down. That was it. This is stimulus spending. Now, let me just say, if I can with you, Larry Summers is correct as far as he went. He is correct. If you give a guy $600 that guy otherwise wouldn't have had, that guy is going to spend more. That's true. He's going to employ people who otherwise wouldn't have been employed. They're going to have higher incomes. They're going to spend more. And there will be this whole cascading effect. That's all true. But it's not the whole truth. It's the first chapter on a 3-chapter book. Second chapter, a little ugly. Unfortunately, today in the U.S. and in the U.K., the tooth fairy no longer works at the U.S. Treasury. The U.S. Treasury does not create resources. It redistributes resources. If there are 100 apples in the economy, let me get the veil of money off the table. If there are 100 apples the economy has, if the government gives 20 of those apples to people based upon some characteristic other than work effort, the people who had the 100 apples now only have 80 apples. For every debit, there's a credit. It's a double entry accounting system. If I can be geeky with you again as an economist, if you go back to your Slutsky equations, if you look at the summation of all Slutsky equations in an economy, the sum of the income effects of a transfer or a tax rate change always sum to zero. This came into economics by Leon Volra. It was brought into English by Lord Hicks in a book called Value and Tech Capital. Go back and read it. And the example Volra used, I'm going to use here. If the price of apples goes up, it is very true that apple growers will be wealthier, they'll have higher incomes, and they'll spend more money. But it's equally as true that if the price of apples goes up, apple consumers will be poorer, they'll have lower incomes, and they'll spend less money. These two effects offset each other by the day, by the week, by the month, by the year, to the 5,935th decimal place. The one's the second entry of the other. Do you follow me? There is no stimulus and stimulus spending because the people from whom you take the money, they'll have less income than they otherwise would have had by the amount of the transfer to the transfer recipients. They in turn will stop buying products that they otherwise had been buying. That will disemploy people who have been supplying them with those products. They'll have lower incomes, they'll spend less, and there'll be a cascading effect in the exact opposite direction. And those two effects will cancel itself out 100%. Government spending is taxation. Milton Friedman said it to you 1,000 times in this very room, I'm sure. And if you don't believe me, let me just use one more example with you. Good economics is scalable. If it's good economics, it works in a population of 70 million. It works in a population of 320 million. It works in a population of 5 people. And it works in a population of 2 people. Good economics is scalable, totally scalable. The problem with 320 million of the U.S. economy is you can't follow things going on. You can't follow all the partial derivatives. You've got Chinese capital flows, credit default swaps, you've got velocity multipliers, all these things going on, and the normal human brain can't handle it all. It's hard to conceive of all the partial derivatives and adding them up as fast as you can go. You can't do it. But when you get down to a 2-person world, you can. And let me, if I can, give you a 2-person world to show you that government spending is taxation. Imagine we have a 2-person world, Farmer A and Farmer B. You with me? That's it. There's nothing else except these 2 farmers, Farmer A and Farmer B. All of you with me? That's it. That's the whole world. If Farmer B gets unemployment benefits, who do you think pays for them? Am I going way over your heads on this one, people? You can't bail someone out of trouble without putting someone else into trouble. The income effects always sum to zero. There is no stimulus spending because the transfer recipients are stimulated, the transfer payers are destimulated, and the effect is zero. But now the really ugly chapter hits you. While the income effects in the Slutsky equations sum to zero, the substitution effects don't. They aggregate. They aggregate. I had the hardest time trying to explain this. I explained it to Senator Nelson, who was a senator from Wisconsin. This was 1974 with Jerry Ford's tax rebate. I mean, dumb ideas just pop up all the time. It's like that whack-a-mole. You've ever seen that game? You whack it there and beep, it pops up everywhere else. You know, I was with Gardner Ackley, Paul McCracken, and Otto Eckstein were the 3 others. They all thought this was a great idea to stimulate the economy. And I was trying to explain to the senator why it wasn't, that there's nothing there. I finally said, and I was just frustrated. And I said, Senator, if these 3 other economists are correct, what's wrong with you? Why would you only do $600? Don't you love our country? If $600 stimulates the economy and makes it worth it, why stop there, Senator? Let's do $1,000. Let's do 6,000, 60,000, 600,000, a million, 100% of GDP. Let's do 100% of GDP so everyone who doesn't work and doesn't produce receives everything. And all those who do work and do produce receive nothing. Senator, what the hell do you think would happen to GDP? Of course, the answer is it goes to zero. The reason why we had the Great Recession and the reason why it has been so long is because of government intervention, because of the stimulus policies, because of what they've done. I've covered 3 topics with you. These are on the cusp of the revolution that's going on today. And let me tell you, do not be depressed, because we're winning, and we've been winning for a long, long time. It doesn't mean we don't get setbacks. We do. The highest marginal tax rate after World War II was 93% in the United States. Now, it went all the way down to 28. It bopped back up again. It's about 43, 44% again. But we aren't through. We always go 5 steps forward. We're knocked back 4 steps. We're on the cusp of the revolution. My belief is that you are going to see a change in this world for the better, and you will be really happy, because there is nothing cooler, nothing neater than being in a boom. You know, investors in boom times really think they're geniuses, and it's really fun making money and having a good, high-paying job. And with that, I'll stop it and say thank you very much for all of you for being here. And by the way, if you get a chance on my book here that I did with a PMI, and by the way, I mentioned in there that they paid me $350,000. I wish. I was corrected. It was $300,000. So, but if you get the book, and I'll be glad to sign it. But some questions on that? Thank you. There's a hand way up high. Go ahead.
Way up high there.
Yep.
If you could say who you are before you ask your question, that would be appreciated.
My name's James Kowalczyk from London. You mentioned the total take from the top 1% going up every time tax rates dropped.
Except for the first time.
Apart from the first time.
Thank you.
What happened to the total tax take? Where,
Every other bracket went down.
So, but in total, did the government end up with less or more money?
You know, it's really ambiguous in some of those periods. The ones that aren't ambiguous is what happened in the top 1% of income earners. They were not ambiguous. And the low income earners, of course, in the U.S., and I don't know how you do your taxes here, but in the U.S., everyone pays the lowest tax rate, who pays any taxes. So the richest pay in brackets all the way down, so they pay the lowest. So when you cut the lowest tax rate, it's an inframarginal tax for the rich people. So it's a deadweight loss. Almost very few people are really on the margin at the lowest tax bracket in the U.S. So as you go up, you find more and more marginal incentives there. But I don't know what the total revenues were. We did a big study on the Kennedy tax cuts, which if you use state and local governments as well, after a few years, tax revenues actually went up above where they otherwise would have been. And this was documented by Kennedy. Walter Heller did all the work there, that one. But I don't know about the other ones, whether they did or not. But they were pretty close. I mean, it wasn't way off.
Okay, thanks.
I think there's one just behind you as well. Yeah, just the gentleman in the next row there.
Hello, my name's Ross Parker. I'm from Imperial Tobacco. My question relates to the PMI-sponsored report.
Yes, sir.
In there, you make 2 points. One of those is a change towards more specific rates of taxation for tobacco products, which, if implemented, I think PMI would more than get their £300,000 back. The other one is about the effect of higher taxation on the Laffer Curve. I wanted to ask whether you thought minimum pricing could also push products over the peak of the Laffer Curve, and did you oppose minimum pricing for the same reasons?
You know, I'm not sure what I would do with minimum pricing, to be honest with you. What minimum pricing would do is, I guess, would raise the price of lower products, value products, and maybe lower the price of the higher products. So you would have more valuable products probably getting a larger share of the marketplace if you did minimum pricing. But I haven't looked at that specifically in this.
Tim Guinness, I'm a fund manager. I did learn from some very intelligent teachers at MIT and one of them was Myron Scholes, and I couldn't understand a word he said.
Oh.
And so I wasn't surprised that LTCM went bust. But I want to understand, therefore, something you're saying. You had the two farmers, and you were making the point that if you gave one some stimulus, some extra spending, the other would stop spending it. But what I'm not clear on is if the other one made the money available through savings he'd got, i.e. lent it. So can you just make sure, I want to understand.
Yeah. I'm not going to answer your question because it's a long, laborious. That's why I took the 100 apples and I said getting rid of the veil of debt and money in the whole process. I get lost at times even going through all the transactions, but let me assure you that you don't get something for nothing in any of these processes. Yeah, I could do a Myron Scholes on you right on the spot. You know, Myron was my roommate at Chicago there. And
I'm going to go to the back. So firstly there and then on the other side. Rory.
Thank you. Rory Brimford, the Freedom Association, London. You mentioned in your speech flat taxes.
Yes.
I just wanted to ask, flat taxes for the UK, yes or no?
Of course you should do it. I mean, of course you should. And you should do it on everyone. Let me tell you what the way I would do it for the U.S. Now, again, remember, I'm far more familiar with, and plus I'm trying to be polite. Jerry Brown ran for president in 1992 in the Democratic primary. I did his proposal on taxation. What we did is we got rid of all federal taxes, all of them. No exceptions. We got rid of the personal income tax. We got rid of the corporate income tax. We got rid of all payroll taxes, both employer and employee. We got rid of Medicare and Medicaid taxes, the estate tax, the capital gains tax, excise taxes, all tariffs. We got rid of all federal taxes with one exception. And the one exception is the book we're talking about today, which was sin taxes. And the reason sin taxes are kept is their purpose is not so much to raise revenues as it is to change behavior. I jokingly tell people that we Americans don't like drunk people smoking while we shoot each other. Sorry. But if you take all those taxes today in the U.S., it would come up to about $2.7 trillion. That's where our total federal tax take is. It's in that range. If you got rid of all federal taxes, all $2.7 trillion, and in their stead put two flat rate taxes, one a flat rate tax on net business sales, or what you people call value added, true value added, with no exceptions, no deductions, no exemptions, nothing, just real value added. Sales of a company minus purchases from other companies. That's it. And then you have another flat tax on personal, unadjusted personal gross income, no deductions, exemptions, etc. Again, at the same rate. Now, what you're seeing I'm doing here is I'm taxing GDP twice. Once when it's spent in VAT, and once when it's earned in income. It's the second entry of the double entry. There are a couple little weird things in government accounting that I don't want to go into here. They're just little. But if you did that, you could match all federal revenues at full employment now, not at the low levels they're now, at full employment. You could match it with a tax less than 12%, 11.8%. All federal taxes. Can you imagine what the U.S. economy would look like today if you had two federal taxes, one a VAT tax of 12% and one a personal unadjusted gross income tax of 12%? That's it. You wouldn't have to even have an IRS any longer. You wouldn't have to file a tax return, for goodness sakes. If the company owes you $100, they send 12 in and you get 88. That's it. Companies already collect. Now, if you mow your neighbor's lawn for $10, yes, you're going to have to send in $1.20. But can you imagine what would happen to the U.S.? That's the flat tax that should be done. And it should be done here in the UK as well. You'd want to have a border tax adjustment, I would guess, to offset tariffs and all that and make sure everyone's on the same footing. But with that type of tax, you can't believe how Britain would fly. And the US would too.
I can remember on sin taxes being asked a very incisive question at a school I was speaking at. The guy must have been 15 or so who asked me this question. And he said, Mr. Littlewood, if tobacco tax is to deter smoking, and alcohol tax, the purpose is to deter drinking, can you tell me what income tax is for? Right at the back, I think there was a question.
Don't you love it? Very well.
Thank you. I'm Claire Core. Your methods and your ideas have been tried and tested and already worked. Why doesn't the US government listen to you? And what did you discuss with David Davis last night?
Let me do the first part first. There is a problem in government, and I'll tell you that problem, and maybe I'll even I discussed this with him last night as well. The problem is, well, let me do it simply with you. Imagine two companies, Company A and Company B. You with me? Two companies, identical companies. Well, with one exception. The employees, the board of directors and the officers of Company A have very high salaries. They have no stock options, and they own no stock in the companies they're managing. The employees, the officers and directors in the second company have very low salaries. They have a lot of stock options, and they own a lot of stock in Company B. All right? Which of those two companies would you rather invest in? Company B? Why? Because the guys who make the decisions have skin in the game. They have to live by the consequences of their own actions. You all follow me on that? Take our politicians in the U.S. Let's take a congressman. I'm going to take Jimmy Stewart, if you wouldn't mind. Mr. Smith goes to Washington. He's imbued with the love of America. He's all altruistic about our country. And he goes in there and he works tirelessly with the committees and all these things in Congress. And he lowers inflation. He lowers the unemployment rate. He raises stock prices. He raises prosperity all over the place. Everyone's happy. The Russians are pushed back out of the Crimea. The world is at peace. It's just wonderful. What happens to Mr. Smith's salary in current America? Nothing. Now imagine his evil twin comes into the United States government and he ruins everything. The inflation rate goes way up. The unemployment rate goes way up. The stock market crashes. The Russians are coming over the border. The children are starving in the orphanages. And we're in the hearts of a Great Depression. What happens to that congressperson's salary? Nothing. The problem with politicians and why they don't do it is they don't have skin in the game. They're spending other people's money. It's really easy to spend other people's money, as Lady Thatcher said. She said socialism's wonderful until you run out of other people's money. The problem is these people do not bear the consequences of their own actions the way you and I do. So my view is really simple. Jackie Mason said it once in a good line, and I'll just use Jackie Mason. My most sincere proposal for government would be to put all the politicians on commission. In the United States, what I'd do is every congressman, when he or she takes office, I would give them a shadow portfolio of $5 million. I would allow them to keep all the capital gains tax-free, and I would hold them personally liable for all the capital losses. They would never, ever, ever vote the way they do now. And they would be judged by the prosperity of the country, and if the country went into recession, we'd sue them. Do you follow me? We will never get good government until we have politicians who bear the consequences of their own actions. They've got to be put on commission. You know teachers who teach well should be paid more than teachers who don't teach well. Merit pay is the name of the game, and it should go for politicians too. That, by the way, I did discuss that with him last night as well. That was on the third bottle of wine. No, I'm just teasing.
Thanks. Chris Snowden, Institute of Economic Affairs. I wonder if I could get your views, if you have any, on soda taxes, fizzy drink taxes, which we don't have in this country. I know you have in many states in America, although not set, I think, at a rate that would hit the peak of the Laffer Curve. And also, if you have an opinion, having written a book about tobacco, on plain packaging, which we also don't have here, but may do soon.
Let me use the soda taxes, and I'll use the same one for plain packaging. I don't know the subject of soda taxes. I did the work on cigarette taxes, and I've got all the documentation in there. I'm sure an equivalent type of project could be done on soda taxes and give you a reasonable answer. I'm sure the general principles are all the same for soda taxes. On plain packaging, I don't know what the results are on plain packaging either. It's not what I worked on and studied in this case. However, it always makes me suspicious when governments want to put in a new regulation. All that, my presumption is it's probably going to hurt someone, but I don't know that for a fact.
Simon Rose, you seem very optimistic about the future for the United States. However, you also mentioned Piketty's book, and that has proven to be very popular with some people over here, particularly people who may well be running the government next year. I'd actually like to ask you generally just the question that's up there. Are international taxes at a tipping point when so many people seem to believe still, despite you, that higher taxes will somehow produce more revenue?
I know, it's amazing, isn't it? I mean, the United States has, as you all know, the United States has the highest corporate profits tax rate of any country in the OECD. I think of any country in the world, but I know of the OECD countries. There may be some little weird thing in, New Guinea or something that has a higher one. But for any country in the OECD, the U.S. has the highest rate at 35%. Now, if you look at tax revenues in the United States, corporate tax revenues as a share of GDP are the 4th lowest in the OECD countries. Does it surprise you they have the highest rates and the 4th lowest revenues? And Obama, none of them will do it. Now, I had a proposal the other day with a Democrat and a Republican, and they were going to get rid of the U.S. corporate tax as it stands and tax value added instead, and to have that revenue neutral to be about a 2% value added tax to replace the corporate income tax. Can you imagine what that alone would do to the boom of the economy? We've got $2 trillion plus in dollars in offshore funds that would come flowing back in overnight at 2%. I had another senator, Ron Johnson from Wisconsin, call me. He has a proposal. He'd also like to get rid of the corporate income tax and replace it with a tax on unrealized capital gains, the rate at which would be set to be exactly static revenue neutral. That's spectacular as well. All these Democrats and Republicans are all honing in this, and it's being blocked by the president. So many of the pro-growth agendas are being blocked by the president. I think the Republicans take the Senate this November, and when that happens, you're going to find a very different country going forward. The reason I'm so optimistic is I don't know what your party members are like here, and forgive me for not knowing a lot more about the UK than I should, but I don't know. But I do know Democrats in the United States, and they're the same as we are. They really are. They're controlled in a party organization that doesn't allow them free thought and free will and expression. Now, when God loved the earth and when Reagan took office, Reagan required all of us to have Democrat and Republican co-sponsors. No bill was to be passed without bipartisan support. No Obamacare ever again, no Clinton tax increase ever again. All of those that were done, one party ruled, overriding the whole thing, Reagan wouldn't tolerate. We got Phil Gramm to co-sponsor our spending bill with Glenn Ramlata. We got Ken Hansen to do our tax rate bill with Hans Conable. But the one that was the coolest was the 1986 Tax Act. And I don't know how many of you know it, but let me tell you what happened in this bill. 1986, peace was on the earth. Reagan was in full splendor. This bill, proposed by Packwood and Moynihan, all right, what it did was it cut the highest income tax rate in America, now think of this, on the richies, from 50% to 28%. Is that a good enough tax cut on the rich people for you? I mean, we wanted to make sure they didn't starve, those richies. So we cut the highest tax rate from 50 to 28% just to make sure they got a little tubbier. In case we missed a few richies, God, if heaven forbid we should miss a few richies, but in case we did, we cut the corporate rate from 46 to 34%. Is that good enough for the richies for you? And just to make sure we did the full round, we raised the lowest tax rate from 12.5% to 15%, just to make sure those poor people didn't get too much money out of their income. You know what I'm talking about? Now, of course, what also we did is we got rid of a lot of deductions, exemptions, and exclusions, so it was exactly revenue neutral. And as you know, I'm describing it jokingly because it's not true. What we were doing is moving towards a flat tax. We were raising the lowest rates and lowering the highest rates and broadening the base by getting rid of, we went from 14 tax categories to 4 tax categories in that. That was the bill. It passed. Guess what the vote was in the Senate? The U.S. Senate. There are 100 members of the U.S. Senate. The vote was 97 to 3. 3 Democrats voted against it. Simon from Illinois, Melchior from Maryland, and Levin from Michigan, who's just retiring this year. Those were the only 3 to vote against it. All the rest voted for it. Mr. Lefty Wefty from California, Alan Cranston, he voted for it. My next-door neighbor and one of my dearest friends, I did the blurb on his book, this new one called The Future. He lives just down the street from me, Linwood, a guy named Al Gore. He voted for it. In fact, he told me 6 weeks ago that it was the best bill he ever voted for. It led to 25 years worth of prosperity. Howard Metzenbaum from Ohio, Mr. Death Tax himself, he voted for it. Tall and Pink, Bill Bradley out of New Jersey, he voted for it. That guy from Delaware, I forget his name, Joe Biden, he voted for it. And Chris Dodd of Connecticut voted for it. Teddy Kennedy voted for it, for God's sakes. And then some House members who voted for it, you'd recognize them. Barbara Boxer from California, she voted for it. Harry Reid from Nevada, then a congressman, voted for it. Dick Durbin from Illinois, he voted for it. Charlie Rangel from New York voted for it. Chuck Schumer voted for it. Why did all of these Democrats vote for it? Because they knew it was right. Go back and read their press releases. By cutting the tax rates and broadening the banks, we're not going to lose any revenues. We're going to create incentives for economic growth, prosperity. They all know that. The question was, we were in a political environment prior to Reagan that was not conducive to working together and became very bitter and partisan. We're in that type of environment again today. Believe me, when the politics start changing, you're going to see the bipartisanship come back, and we will be led into prosperity, not by Republicans, not by right-wingers, not by conservatives, but by everyone. Everyone in their right minds knows you cannot tax an economy into prosperity, don't they? Come on, everyone knows that. Everyone knows how to get prosperity. Read any economics book you ever want. Low rate flat tax, broad-based, spending restraint, sound money, free trade, and minimal regulations. Then get the hell out of the way and let the economy go. And I'll believe you.